crap. All right, welcome to StockMarketPundit.com. What I have here is a daily chart on the S&P 500. It's in the short term. All right, welcome to StockMarketPundit.com. I'm going to do a daily chart on the S&P 500 because this is what the people are going to look at. Now, what we did here was that we had shorted the S&P up here in January. We put in a top. We shorted on this downtick. If you want to go and take a look at our trading videos, you'll see where I had shorted it. When we didn't break below 1040 down here, I went long that call contract, and we still own that. And the thing about it is that I had talked about the S&P putting in a short-term bottom. This was the bear reversal, and then this was the bull reversal. And bear reversals, and you have bull reversals. Otherwise, you couldn't have a stock market. You have to have both short-term trends. So basically, here's what the public is going to look at. This moving average convergence divergence has hit a daily buy signal. So now everybody wants to be in. That's this moving average convergence divergence. When we were going down, we hit a sell signal there, and it went straight down like that. Now we're over here, just the opposite to a buy signal. Think about it. The other thing of it is, these are daily moving averages. The 10-day moving averages is climbing on the S&P. The 50-day moving average is back above it. This is where major breakdowns were. The 10-day moving average crossed over, went going down the hill, and so the S&P went down with it. We flattened out when I said that we were flattening out and that we were putting in a bottom over here, right above 1060. That was a knife hook low. Go back and take a look at our videos if you have amnesia. Find them there. You'll see. This is at its finest. So basically what we're going to be taking a look at is, where do the short sellers start to cover more up here or panic and fuel into the move? Another thing we're going to take a look at is right there at that 1130 where this big daily bar was on 121 of where this was. And in the short term, here's a little gap. Okay, and we're hitting that. The point of it is that the bear cycle, the bull cycle has in play, and the moving averages on a daily level are pointing upward. This is when you want to be short. This is what we teach you here. We also, on the other hand, and here's how the 10-day crosses over the 20 and they separate and stocks get real weak. Now that we're up in here, what we're going to be looking at, it's the beginning of the new month. And we're going to take a look at this daily buy signal of where people really step in and what is going to fuel this thing higher. Remember, in every bull or bear trend, they have a way of testing each other. You could come all the way back up to 1150. It would not be abnormal. It will be dependent, though, on the bulls getting exuberant to push it back up there. And basically, somewhere in here, we're going to be looking for reversals. So the bear trend has turned into a short-term bull retracement trend from the bear. And it's all right here. And that's the update I'm going to give you. If you want to learn more, well, then you go visit StockMarketPundit.com and sign up, look at our trading videos tab, join our online trading community there, click on the link. So basically, I'm telling traders is, we're going to see if the fund managers have the fear of missing out and want to get back in. That's the SP.